Thank you, Chairman. I'd like to thank each and every one of you for being here today. I'm also, like a few of there, a small business owner. And one of the things that I find very frustrating is the fact that the Federal Government can come in and take 55% of your estate. I used to do death tax planning, and you know what? We've got to stop calling it estate tax. Call it what it is. It's a death tax. The last person dies, the survivor dies, you've got to go in there. And so many times I would go out and I would see the families have to go in and spend $10, $20, $30, $40, $50,000 a year to make sure that they could keep their business or their farm. I guess the first question that I would like to have, and any of the folks on the panel could answer this for me, is do you believe that the death tax hurts or helps businesses in the United States of America? Let's go with Mr. Flesher.
It absolutely hurts them. I mean, you talk about the planning process and having certainty. Even with that certainty, we still have to plan and we have to adjust. We don't know how long we're going to live. And our states still change every year, irregardless. So it's like a double whammy. I mean, it's tough to plan for that future anyway. But with the uncertainty of having this tax over your head, it's impossible. You can't do it.
Yes.
I was just going to add that it takes a lot of time and resources away from your business, too, in those years where you're trying to figure it all out, trying to figure out how to pass it on. I mean, my dad has spent a significant amount of time over the last few years just trying to figure this whole thing out and find a way to pass on his company. That effort could have been spent focusing more on the business. We could, those resources could have been used to expand the business, hire more people, buy more equipment, open another branch. So it does, it's not just money, it's time too that's taken away.
Right. And Mr. Katz is probably up on this. If life insurance isn't properly owned, that also gets included into the federal estate. So some people think that they're properly planning, and in actuality, they're actually adding to the 55% or whatever that number is. One of the other questions I have, and I think that one of the things we see is the heirs are sometimes forced to break apart the family business in order. And is that basically what you're saying? Is something happens to your father, basically it's...
Yeah, there isn't a big bank account somewhere with enough money in it to pay the estate tax. So we would have to come up with it somewhere. We'd have to, I don't know, you'd have to get out of certain lines of business, maybe liquidating some of the inventory that we have. You'd have to close down a branch. Somehow you got to come up with that money, and it isn't just sitting there. It's all invested back into the business.
So your brothers and sisters, would you be willing to say that they would do better with that, up to 55% of that money, or would the federal government do better with that?
I think we could handle it a little bit better, yeah.
These are tricky questions, I know.
I'd like to make a comment if possible.
Yes, ma'am.
We keep talking about how it's going to affect all these small businesses, and it does affect some small businesses. But according to the statistics, as I said, when there was a $3.5 million exemption, only 4,425 small businesses were subject to the estate tax, while there were over 22 million small businesses filing income tax returns. So although it does affect some, and I appreciate how it affects them, but we have to look that it's not every single small business, and most small businesses have been made so fearful that even the corner barber shop is afraid that he's going to lose his business to the estate tax, and he's not even going to be subject to it.
Very good. I appreciate that comment. I got 1 minute left here. If maybe we go to Mr. Flesher on this one. If the death tax was fully repealed, would you use the capital to hire more workers, purchase more equipment, or otherwise invest in your business?
We'd continue to invest in our business and grow our business. And, not only our families, but we have long-term employees. I've got employees that have been with me 26 years, 24 years, 20 years, 18 years. It's not just one or two. So, and these employees are fully vested in this business and may have an opportunity to take over that business or part of that business as well. So the ongoing investment in the business would be a definite.
Yeah, it's one of those things, if you want less of something, you tax it more. And unfortunately, none of us in this room are going to get out of this world alive. So, but I thank you all for coming. Thanks. I yield back.